Good morning, everybody. Welcome to the Flow Show. It's Tuesday, the 19th of September, and we're heading in towards all those big central banks coming up. So we're all getting ready for that. Morning, Kay. How you doing, mate?
Hey, good morning, Ryan. Good morning, everybody. Yeah, all good, all good. Ready to rock and roll.
Good stuff, good stuff. Right, well, rock and roll we shall. We're going to start with the PBOC, and them and the Forex regulator apparently held meetings with some foreign financial institutions, including the likes of JP Morgan, HSBC, Deutsche Bank, and also firms such as Tesla and BASF. Not sure about what they were talking to those guys about, but I think we can all guess potentially what that was all about. Dollar moves against the yuan and so on and so forth. So we'll wait to see if anything has come of those meetings. The China Securities Daily say that they may keep the LPR steady in September, the loan prime rate, but cut it further in Q4. That's the next rate up and coming. Not sure when it is. I think it's soon, but that's looks like it's going to be staying unchanged.
Tomorrow.
Is it tomorrow? Is it?
Overnight.
Yeah. Was it never on any calendar?
Well, I've got it on tomorrow's calendar.
You've got it, have you?
Mm-hmm. Yeah.
Where is it? I can't find it. Oh, well. It's tomorrow. We'll find out whether that story is right or wrong. Over to Japan, and Sumitomo Matsui Banking Corp is to boost rates on dollar deposits to 5.3% from 0.01%, which will give them higher interest rates on dollar deposits than some of the big American banks as well. I just caught this one briefly as getting ready for the show. Anything to take from that 1K? I mean, you know, offering big dollar deposits, is that going to entice inflows into dollars from Japanese savers?
Yeah, it could. It could also be another, well, kind of a hidden or less hidden way to boost inflation. But it looks as if they really want dollars as well around that Sumitomo. So I'd view it somewhere as a bit bullish dollar yen as well, if you can say that. But yeah,
that's just it's improving the carry trade, isn't it?
It should. But then, I've seen that article. I think it came out yesterday. Looks like a bit of not a liquidity thing, but they're okay to continue to accumulate dollars then.
Yeah, I think it's on some fixed term savings product. So you have to park your money up for a while, sort of thing, rather than everyday deposits. So I think there's some strings attached to that.
But it's a pretty high rate, huh?
Yeah, 5.3%.
If you look at the 1 and 2s in the US yields, they're not even there. So it's a very high rate.
Yeah, we'll have to see how that drives things and possible flows. Right, over to the industry minister over in Japan, Nishimura, says we want to respond appropriately if yields rise. And monetary policy to buy time will come to an end at some point. So keeping an eye on the yields, even the guys in industry keeping an eye on things over there. But also indicating that we're heading towards the possible exit on monetary policy as well. Moving on to Australia and the RBA minutes. I'm sure these guys just copy and paste what they said in the last minutes. They considered a rate hike, but decided the case for a pause was stronger and wants more time to assess past hikes. Further hikes are possible, blah, 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 blah. So it was pretty much, as I say, rinse and repeat of prior meetings as well. So nothing really to take from that one. Over in Europe and the Eurozone, ECB's Villeroy yesterday well, they upped 2023 growth forecast to 0.9% from 0.7%. They cut 2024 growth to 0.9 from 1%. And 2025 was also a cut to 1.3 from 1.5. They also cut next year's core inflation forecast to 2.8% from 3%. So 2 pips down on that, still well above target. Says that the ECB will be maintaining rates at 4% as needed. ECB's de Guindos said hikes are still working through the economy, and there's some uncertainty over the effect of hikes on activity. One of the bigger hawks at the ECB says he hopes that last week's interest rate hike was the last. That's ECB's Casimir with that comment there. And as we were talking about on the Flow show yesterday, I noted the uptick in comments talking about QT and how that might become the next policy shift from the ECB. Some members saying that that's needed before they even think about rate cuts. Well, there was a sources piece out later on in the afternoon saying that the ECB plan to tackle excess liquidity in the next stage of the inflation fight. Those sources must have been watching the show yesterday. Over in Canada, we had some data out. There wasn't too much data out yesterday, but we had housing starts looking okay, beating expectations, although a couple of pips down on last month. We had PPI, which was a little bit mixed. Main PPI, headline PPI, was up 1.3%. Was only expected to rise 0.5%. Year on year didn't drop as much as last month. So a bit of inflationary pressure there. However, on the raw materials pricing, again, year on year, not as heavy a drop as we've seen, but still a negative number. Month on month, coming in lower than last month and missing expectations, though still a gain. So still a bit of stickiness in the PPI numbers, a bit like we've seen in the CPI numbers there as well. So something for the BOC to take note of. Over in the US, we had the NAHB Housing Market Index, which dipped back a bit to 45 from 50. So maybe just flagging a bit of worries there. We do get a lot of housing data this week as well, some of the main numbers. So we need to see if that's reflected. But that housing data for the US that we get this week is a bit behind. So it's all going to be August stuff still, maybe even July. No, August stuff. So this NAHB is September and this is August. So it may not reflect any problems that we see in that NAHB number. US Treasury Secretary Yellen said oil prices are being watched very closely. It's also not seeing any concerns in the bond market regarding issuance. You remember that all got ramped up higher to fill some of the black holes in the borrowing. Over on the shutdown front, US House Speaker McCarthy said that he will bring a stopgap government spending measure to the House floor this Thursday. So this is just to get over the hump, I think it's end of September, October, to carry that through to the new year. There is still a risk that we have a shutdown in that period if they don't have an agreement, but considering what happened when they had this agreement that knocked us through to this period, probably something will be done on that anyway, last minute as usual. Now, the Saudis have been talking up their production cuts, saying they're not targeting oil prices, but are targeting less volatility. OPEC's conduct is benign and no different from actions of central banks. Righto. Who was it this morning? Was it the energy minister or the Crown Prince or someone was saying that they're not trying to jack up prices?
Yeah, the energy minister over there saying they say the move was not about jacking up prices, but in the meantime we are about 25 bucks higher from
there you go. But that's not jacking up prices at all, is it?
No, not at all. It's Prince
So,
Abdulaziz bin Salman.
yeah. Yeah, I'll let you handle his name. I'll just call him the Saudi Energy Minister.
Yeah. Best.
Further on the geopolitical front, China's Foreign Minister Wang Yi has been bigging up the cooperation with Russia, saying that China and Russia should strengthen strategic coordination. Now, Canada is under the cosh of strikes as well in the auto sector, because one of the union presidents says the union does not yet have a new labour deal with Ford ahead of the deadline. If a deal is not reached tonight, there will be a strike against all Ford facilities. So Canada under the cosh, the same as the US on that front. And that is it. That's all I've got on the news front. Bit of a quiet one. Kay, you got anything else you spied in the wires?
Not really anything pressing, anything specific. Just noted yesterday that article about China removing those that gold import cap, and I think that that has closed anyway the gap between their physical over there and the market price. So that's maybe one thing of note, that underpinned gold as well, and perhaps weighed just a little bit on the CNH, but it's still they're still like putting their fixing ultra low and at the same time injecting liquidity. So it's still a bit of a touch and go or indecision anyway on what's happening over there, what they want to do with the yuan. But anyway, taking away this import cap is perhaps just one small measure that they let go. Now we have to see what they do with all the rest, with interest rates and reserve requirements, FX requirements, etc.
Yeah, because China themselves have been fairly hefty buyers of gold recently as well. So allowing this relaxing of regulation is probably for firms and stuff, because obviously China government can do what they want. Looking at the price, this 30-40 zone, maybe 30-35 zone is being tested. You can see this 30 level, which was the bottom of the zone that I showed. I think I showed it yesterday. Was the main resistance area. We broke above that, hit the next level. It's come back down, tested the 30 level. Now it's pinged back up. So you can see technically it's playing very nicely with the levels at the moment. It needs to clear this 40 area before we get perhaps a push up to those 50s. But still, this is all sort of middling in the wider range between that 1985s and 1885. So, you know, it can knock around a bit here. If we get up to those highs, then, you know, need to see if those cement, and that becomes a further resistance point. And then maybe we ping pong a little bit between the intra range around here, between that 1900, 1955, 60 area. But for now, it's looking a bit more bullish, whether it's those headlines or not. That's what the market wants to do with it at the moment. Ali says, what can Biden & Co. and other world do against a bullish OPEC-related spike in oil? Can we see $100? Yep, of course we can see $100 if that's where they want to push it. What does it mean for the US? It means they might be forced to release more oil from the SPR to suppress prices. Now, don't forget that the OPEC stuff is more related to Brent than it is to US oil, although they will move in tandem price-wise by varying degrees. So we've already heard that, as Yellen said, they're worried about oil prices, keeping a close eye. Gasoline prices will be going up. That's going to bring inflationary pressures back into the US, albeit volatile ones and ones that are potentially fixable. So we'll have to see whether the US reacts to that. It is a bit strange that that the market is buying into these production cuts so much, even while we know that manufacturing and certain sectors in China is perhaps not doing all that great, which raises questions over the demand side of things. But when you're OPEC and you want to squeeze prices, you've got the power to do so. So if that gets up to $100, then a few people are going to be sitting up and taking notice. In the meantime, for oil, just looking at the pricing here, been mentioning this 93, 94 area, which has been a long worked area, if you like, previous action up here. So this is going to be a pretty big test for oil right now. If we can break that, we're probably going to be on for 100 not long after that. But if we hold it here, it might just present a bit of a speed hump. So if you do get us topping out in this area, short term, otherwise we may get a bit of a pullback. For those of you trading the loonie, you'll really need to keep an eye on that, because we're looking well on the oil bus right now. The loonie's broken down through the zone around 134, 60, 70 and 135. 135 already showing up a bit of resistance into it now. We need to keep an eye on this break. If we start to find it's holding here, it could mean further downside. But as we're on the oil bus right now, you need to keep an eye on what WTI is doing up at that 93, 94 area, because it could mean that if we find a top there, it could mean a bit of a bottom forms in dollar CAD. Now, what I would like to see is maybe a move down to the 134 area, because there's a good bit of tech confluence down there. It's a prior S&R level, support and resistance level. It's the 50 fib, 133.93. We've got 2 daily moving averages there around 134s by the 155-day moving average. So if the dollar CAD drops down to here and oil hits that zone 93.94, I may look at a little bit of a counter trade. I'm already knocked out my prior longs from down here, 131.50s. I had my trail at 134.50. I have been feeling more bearish this when we were up here, and I was hoping, as hope one can, for the BOC or something to give us a kick up to that 136.50, but it never came, and I've watched it dribble lower ever since. So I'm out my position, but I would look for a long here if all the ducks align. The tech confluence here, the tech confluence in oil, just might provide an opportunity for a bit of a bounce. But I'm not too keen on trading a retest short of this area here because of how bullish oil's looking. And I think, again, with that oil resistance, possibly, I'm not sure there's good risk reward in trying to short right down at these levels. But we should play it by ear and see what the price action wants to do with that. Dollar yen was looking a bit perkier this morning when I sat down. Oh, that doesn't look perky. That looks perky. Another test up towards 147.90. It's still very sticky, this area, this level. Did we find any reason why the dollar dipped off K in that move there?
No, I think just a couple of no, just some. I reckon just because we printed virtually the bottom in or the top in the dollar at that stage around the hour. So I reckon a bit of fixing in there. Could be a corporate, could be some asset manager needing to do something. I think it's just a flow, mate. I didn't read anything behind that. There was no news, no nothing.
Yeah, it seemed to start around when we usually see stuff like that around 8 o'clock in the morning, but it just accelerated a bit later. Yeah, so anyway, that's knocked that off the high and reinforced that resistance area up there. Still, this is all sort of middle ground at the moment. 147 is still the main level. So I'm still a little bit long up the top here, 66s, and still a bit long from 147. So I don't know what I'm going to do with this with the 66s part. My stop's just under 147.50, quite a tight one. I'll maybe knock that off going into the Fed and just leave the 147s off and see what the Fed want to do with it. But I think we're going to have a decision made over the FOMC. Oh, I hope so. Anyway, we're either going to bust up above here, or maybe we're going to head down to 147 and get below that. I think this is too tight a range for the FOMC, unless it really is a boring one, which it's possible, if I'm honest, but we shall see. You never know with these central banks. I like to pull something out of the hat. Kay, you was off mostly yesterday. You got anything you want to share with us today?
Yeah, I can look at a few things, although it's relatively quiet, right? But Angela noted there that Aussie perked up, and I don't really know why, or is it that finally because we haven't seen anything on the minutes. If anything, the minutes were rather showing us that that the Aussies are a bit worried about the economic situation over there, and yet Aussie found a bit this morning, perhaps a bit of flows, perhaps a bit of how shall I say, a bit more confidence on China, because I've seen a few articles and comments about finally China may start to slowly turn the corner. Always remains to be seen, but
I think you got it. I think you got it right this morning. I think you got it right this morning in the chat room. It looked like a general commodity uplift, because
it's a commodity
Kiwi's
uplift,
up.
but then it's a commodity uplift, but then copper is still down a percent, which is doesn't really rhyme with a higher Aussie. No, I think really, I think what we are seeing this week is that we are ahead of this FOMC. There's a lot of central banks still to come out with stuff. We've got the Bank of England, of course, the Bank of Japan. After that, also worth noting is that not only CAD, but the rest of the yen crosses are still relatively big, and perhaps Aussie yen is no stranger to the move this morning as well. Although dollar yen remains very stable, I reckon it should remain stable at least until the FOMC, and then maybe even over the Bank of Japan. It depends what Ueda will come up with. This month, nothing is being expected for the Bank of Japan, but I do think that Ueda, being a very good communicator, as we've seen since he took the lead of the Bank of Japan, he is going to say something, at least about possible plans, So yes, Aussie perking up a little bit, and we are here at a bit of a level around that 64.60, as we have already seen before. And then it's really, to me, it's really going to be that if you look at the bigger level, it's probably going to be here. This trend line may be a bit watered down by the time we get there, and it's slowly rising. But yeah, it's around 65.25, 65.5 if we get there. But I don't see how or why we should get up there before the FOMC. This could be a very good zone to monitor on the FOMC if we get anywhere closer. I also think that if we look around the spectrum, is that the dollar is a little more on the defensive globally, although we're not breaking down in the dollar. I don't think we are going to break down in the dollar before the FOMC, but all of this may just mean that people are scaling back on shorts, Aussie in general, and I think in line with CAD yen, COMOD yen, that Aussie yen also has a bit of demand. I don't see too much of a big move unfolding here, because I wouldn't see a reason why, barring positioning and people getting out of positions. I think it's just a fact that we have seen a move back up from those lows. Then we are going to retest a bit of a break zone. Then we bounce again. Then we come back here, and then we bounce again. Just a wishy-washy action to me, because I don't see a reason why we would really start to ramp higher unless something is really improving on the Chinese side, and that would take commodities a lot higher as well, and that would be underpinning the Aussie de facto. I think euro dollar and cable, it's actually, there's not a lot to show there, right? It's going to be everything about 107 to start with, as you already showed. Then above there, we are going to talk about this zone here. If there would be a surprise or dovish surprise tomorrow on the FOMC, 107.70, 108 the figure, that's going to be one I'm watching for tomorrow. And then that prior low that we had already around 106.35 here. There's really not more to say, right? Right now. It's all going to depend about what's going to happen on the combination of all those central banks and, of course, the FOMC. For the time being, my global bias is still for a dollar to remain bid globally, because even if they don't do anything, I don't think that they will turn hawkish yet. It's still going to be a higher for longer. And don't forget that QT is still running in the background. Now, for the euro, but that's food for the next meeting only. If they start to talk about QT, it may support the euro, but I wouldn't jump too early into conclusions about this PEP and APP and whatever on the euro. So I really think we are in ranges until at least tomorrow. You've already showed that gold here. Silver is also enjoying a bit of a revival. If ever we are seeing things improve in China, let's put it that way. If we see things improve in China, this has the potential to really start to ramp higher. Really, I think silver is going to be one, because it's an industrial metal. It's going to be one that's going to be hoovered as well. Likely with gold is going to remain bid as well, but this one should really take off if the situation in China is showing signs of improvement. Quick look at Brent, 96 bucks. I think we have to watch. It's trading just below the 95 handle. 96 is going to be a level, and then if you want to take the second one, the second top, there's a 50% is around 90, 97 and a half. So this 96, 97 and a half, that's going to be your gateway to 100. But the real resistance, if we go to 100 and above in Brent, that is if WTI would also be heading for 100, is going to be here at around 104. This is, if we get there, this is probably going to be one steep hurdle. And if you look at WTI, if you think that we are in this kind of A, B, C, D stuff, that should lead us to around 95, 95 and a half, 96, okay, in WTI, if we see equal legs. And that's also where we see some decent resistance here from prior levels. To me, the 100 everybody's talking about, but will it get there? I'm not even sure. We will need to see demand prop up. Cable, I think we're mooching around until the BOJ brand. 124.10 here is probably going to be your first resistance, and then 123.70. It's really also tight, you know. I think for once the FOMC and Bank of England are done, then you're going to have to look at the 123.10. If that breaks, then cable is really going to move lower. But we need to see the combination of both central bank first. And for as long as it caps around that 124.10, I still think it's going to be a little, it's feeling a little bit heavy. Also helped with the sterling crosses, seeing a lot of people trying to be sterling short sterling Aussie, sterling Canada, for instance, and that may weigh a little bit on the cable, but it's really stabilizing. I'm not going to make any big bets on what may happen right here and now. Because if you look at the Canada, has really strengthened quite a bit on this last run in oil. But if you look at the oil move and the NOKI move, NOKI has actually, okay, since yesterday, it's down. The euro Norway is down, dollar Norway is down. Finally, it responds a little bit. But then if you look at the whole move that we saw in oil higher, it actually, before yesterday, didn't even respond. So versus the Canadian dollar, Norwegian kroner is still pretty weak. Keep an eye on what's happening here in this 1148.5 50 zone where we are in right now on the euro NOKI, because we may see a bit of a turnaround. But if that holds 48.5 50, I don't really see what Norwegian kroner could benefit more from this Brent rally. On the dollar Norway, we had the same setback as we've seen on the euro Norway, of course. But have a look at what's happening in the low 1070s on dollar Norway if we'd ever get there. Okay, if this holds, it could bounce again. All right. So that's about what's happening right now. I don't really have much more to say, Ryan. The only thing is,
yeah, no worries.
Sorry, mate.
No worries. When you're done, I can grab it back.
Yeah, the only thing that I would look at is Euro Canada coming into relatively important support zone here between 142.85 and 143.25. Keep an eye on that, because it's come a fair way since oil started to turn in the Canadian job report, etc. And then the ECB here gave it another knock on the head. But keep an eye on what's happening. 143.25, also this low around here, and 142.85. So keep an eye on Euro Canada. And that's really it for me for today, Ryan.
Yeah, thanks, mate. I shall grab it back. There we go. I'll just have a look at Euro Stocky, because there's quite a decent expiry on Friday, 1.12 billion, at a bit higher up, 1220s, somewhere around there. So it would be a bit of a high print if we got up there. But just keep that in the back of your mind, because you never know what may happen. If we suddenly see a move up towards there, maybe some option-related dealings going on. But that's for Friday. There's a little bit on Thursday as well. Back to Euro Sterling. Ali says that every big bank is asking for 87. Both UK and Eurozone economies both in a bad situation. Why are the banks asking for 87? Probably because they're all long, and now they're telling everyone they're all long, so everyone else piles in. I don't like being the same side as the bank, so if they're all long while I'm long, I'm going to be a bit nervous. But in the meantime, he is looking again a little bit bullish, holding above 86, 86.10. Got this zone next up that you should know by now, 86.45 up to 70. It's been a definite area where we've seen plenty of action previously. Still, though, unless we do bust this 87, 87.20, we're really just stuck in this range between there and 85. So if you want to trade around in the middle here, you can do a bit of scalping off the levels. But otherwise, I tend to just stick to the wider ranges. So I continue to be long in this one. I'm not too bothered about this move up. I already cut some of my last position when we got up to 86.20s, so I'm not too fussed about this move right now. But if we do get above this zone, and in towards 87, I'll look to take a bit more off my longs and then see what happens into the 87, 87.20 should we get there. That might be possible that something happens to that area when we go over the Bank of England meeting. Obviously, CPI tomorrow could be a little bit volatile for this one if there's a big variation. So it's going to be our first marker for the BOE, that inflation data, first thing out tomorrow morning. I'll have to get up early for that one. I don't like 7 o'clock data, stupid time to put data on. Anyway, why don't I want to take a bank's direction? Because usually they're wrong. Depending on the bank, Citigroup have got a great record in picking tops and bottoms the wrong way. I think one of their standout ones of late was their oil short. They pumped shorts round about there, I think it was. No, it might have even been a bit less. Might have been down here somewhere. I think it was below 80 they pumped getting short oil, and look how that trade's gone. So yeah, that's why I don't follow banks. Plus, you know, they're there to sell a service, not to give trading advice for the likes of us. Anyway, enough about the banks. You know my theories on those and their forecasts. Right, I've got not got much else to talk about either. I'll just doing a bit of trading. Yeah, go on, mate.
Yeah, just be careful about those Canadian CPI data this afternoon. It's probably going to be the biggest event of the afternoon. So keep an eye on what's happening there, because we had that better jobs report. If ever there's a big enough uptick, and they're actually expecting an uptick in the headline number, just be aware of it. It may push, give the Canadian dollar another push in the back. You know, it's already pretty strong, but just be careful on that. And it's also, if it's the main one of the day, there's going to be a lot of eyes on it, so it may move a bit, right?
Yeah, very much so. And also keep an eye on that housing data in the US. But yeah, that might be the kicker for a move down to that 134, which looks a bit tasty sitting here right now. So that's where I'll be parking my my attention anyway. But yeah, otherwise, not a lot to go on today. It's one of those weeks where you just have to sit and wait for the big events and then hope it brings us enough volatility to grab some trades out of it. But anyway, we'll get into the Fed in greater detail tomorrow, what we expect and what we expect of prices for that. So anyway, enjoy the rest of your day. Take it easy. Watch those events. Stay safe. Don't get stuck in trades that aren't going anywhere. Pick your levels. Thank you, Kay, for all your insights as well. And we shall catch you all tomorrow. Thanks a lot.
Have a good day.